So I am here now talking to you about trust deed investments. And a trust deed simply means that you've placed a lien on somebody's property and you are being paid just like a bank. So you've loaned your money out like a bank, but the big difference is you don't lend out as much as the bank. You don't lend out 70% or 80% or 90% or 100% of the value of the property. You only lend out 60%. And there's a reason for that. People always ask, why do you only lend 60% of the value of the property? And the reason is because once we get done foreclosing, fixing up the property, hiring the real estate agent, and going for a period of 6 to 10 months without any interest on our loan, we just have quite a few expenses that have gone out, and 60% protects us so that at the end of that period of time we have money left over, or we've made a profit, which is the name of the game. Actually, can't be in business unless you're trying to make a profit. And although we specialize in loan amounts that are low, anywhere from 20,000, in fact once we did 12,000, but anyways, from 20,000 up to $1 million, and that's pretty low in the hard money world. Because of that, we have not had very many foreclosures. We have one of the lowest foreclosure rates ever. We didn't get hit really hard during the Great Recession because we didn't have a lot of loans outstanding. I had seen what was coming, and I had downsized. I downsized my company. I downsized all of our investments. And so we were in good shape when the really bad stuff hit. And since 2009, January of 2009, business has been booming. The conventional lenders aren't lending. It's very difficult for an investor to get a property and get financing on it. And so we are the answer to those people that are purchasing real estate now to enhance or improve their net worth. And we will lend to them at 60% of the value of the property. We require that they put in the 40%. We require that it be full 40%. No skimming on that. And you need to have money left over to make a couple of months of payments and to pay all your closing costs. So if a borrower comes to us and they have that, even though they might not have the very best of credit, or they may not have the very best of income monthly, if they plan on buying this property and fixing it up and putting a tenant in there, then it's not as important what their income is, as long as we verify that they can make that payment when there's no tenant in that property, and we do that. And if they don't pay us as they are supposed to, then we foreclose. So our loan terms are, you have payment due on the 1st, you have 5 days to get that payment in, and at the end of that period of time, and you haven't made your payment, you owe us a late fee. And that late fee is 10% of what you are paying monthly. At the end of 1 year or 2 years, which is how long our loans are, if you don't pay us off on time, you owe another 10% based on the principal balance of the loan. We've never had that occur. Our borrowers either ask for an extension in time or they pay us off in time. So we've never taken advantage of that, but that's in the loan documents just to ensure that we get our payments made on time, which is the whole point of this. If we are going to lend our money out so that borrowers can acquire their properties, then we ask that they make their payments on time to our investors. And we have a fantastic record on that. So that's the basis of what we do. A lot is involved. The laws have changed dramatically. So now you can't just lend to somebody based on the equity in their property. Let's say it's worth 100 and they come to you and they want 20,000. Too bad. Back in the day, we could do that. Now we can't. Now what you have to do is make sure that they can make the payment. You have to make sure they file tax returns. You have to pull a credit report. You have to have a loan application. You have to verify the information that they've told you. And it is a lot of work. The federal government has made it so much worse than it used to be in some ways, and yet so much better in other ways, because it's not easy to take advantage of a borrower anymore, and I'm very, very glad of that. On the other side of it, many borrowers are very upset with us because we can't just go look at the property and give them some money. There's a process they have to go through. And the federal law actually says that you cannot lend to them earlier than 7 days from the time that you've disclosed all of your fees on a good faith estimate with a truth in lending. Back in the day, if I liked a house, I could lend on it the next day. File my deed of trust, have them sign my promissory note, go record it at the county recorders, done. Not anymore. So these videos are designed to address a number of questions that borrowers have and a number of questions that investors have. My job is to bring the two together, and I am a matchmaker in some ways, and it takes a lot of skill to put investors into deals that they like and to get things done on time. And so that's why we're expanding out to the web, so that we can have another means of being able to get the information out to our investors. That's the end of our first show, and we will continue on with what type of borrowers do we lend to, what are some of their characteristics, and then followed by what type of investments do we have available.